Hello and welcome to Business Insider with Mario Toneguzzi on YYC Business, brought to you today by MegaPixx Media. Joining me is Anthony Scott, who is research analyst with The Network. Thanks for joining us today, Anthony.
You're welcome. Nice to see you.
Well, The Network is a real estate intelligence company, comes out with a lot of research and on the markets in Calgary and Edmonton, right, as well. But we're going to talk about Calgary today and the mid-year report that came out recently on the commercial real estate market and investment in it. What can you tell me about the first half of this year, Anthony, and what it was like from an investment side for commercial real estate in Calgary?
Well, we're seeing both good and bad. We're seeing good in that we've had well over a 50%, 150% increase in sales over this time last year. So buyers are here. They're strong. Their wallets are open, and they're buying big time. The downside is that they're focused on a lot much smaller priced assets, and so the overall dollar volume is about 11% below where we were at mid-year of 2020.
Okay, then. Any thoughts of why things are happening in the market the way they are right now?
Well, we're as I mentioned briefly, we're seeing a lot of smaller purchases, and those smaller purchases tend to be commercial condominiums. People want to own their real estate. And that's where 52% of the sales to mid-year of this year have been commercial retail, commercial office, and commercial industrial condominiums.
Maybe talk a little bit more about that, Anthony. Why is that an attractive option right now for people?
Well, one of the big reasons and a good contributor to it is the very low cost of borrowing. As you know, we're in historically low interest rates, and so that makes it a really good time. And owning a condominium allows for people to buy and own the space that they need, whether it be a small space or a medium space. They don't really have to worry about paying for too much.
So when you look at the overall market, looking at different asset classes, what asset classes have done well so far this year, and which ones haven't?
Well, land is a historically strong asset class, particularly land that's being set aside for residential development. Calgary loves its suburbs, and so the land that's being bought for suburban development continues to go. And industrial properties have been reliable for years and years and years. I used to write for another commercial firm here in Calgary, and for 10, 12 years, the commercial industrial always was a very, very strong shower. At the other end of the spectrum, though, we're seeing that commercial office buildings are weak for obvious reasons. There's high vacancy around the city, so those are less attractive. Mm-hmm. And sort of bouncing around in the middle are retail properties. They tend to be reliably in the middle when it comes to investment as compared to the other asset classes. We saw a couple of shopping malls change hands so far this year, which is nice. They were the exception because they have very strong anchor tenants. One being Calgary Co-op, the other being Canadian Western Bank.
What shopping malls were they?
One was Center 58, and the other one was a shopping mall in Taradale.
Oh, okay then. Now your numbers are going to be obviously different come the third quarter. With news yesterday, yesterday with the Bow Tower being sold. Like that's a 1.2 million plus deal. Were you surprised by that?
That one came out of nowhere, but the Bow has been in the news for several years with Synovus and Encana freeing up space, then Nexon moving in. I don't think anyone saw that sale or that portfolio sale coming. So that's part of a sale of an Ontario property as well.
Yeah.
So we'll see what the numbers for the actual building shake out at, but I think that's going to have a strong effect on Calgary's Q3 numbers, just like you said.
So when Anthony, when you look at the third quarter, which we're in right now, and into the fourth quarter, you know, what are your thoughts, or what are the signs pointing to you know, to in terms of what the investors are feeling like these days, and are they in the mood to buy?
Yeah, they're definitely in the mood to buy. We saw this all through last year and through the first half of this year. Our sense is that it's going to pretty much continue on the track it's been. It's going to be smaller purchases, not many big ticket purchases over 20 million or 25 million, and a continuance of the commercial condominium purchases. There's a lot of building, a lot of development in that particular area. Down in the southeast where I live, Beatty has been going strong on the second phase of one of their developments, and it looks like it's already selling very well.
Okay, super then. Well, thanks a lot, Anthony, for joining us today.
You're very welcome. It was great to speak with you.
All right, super. That was Anthony Scott, who's research analyst with The Network. This has been Business Insider with Mario Toneguzzi on YYC Business, brought to you today by MegaPixx Media. Thanks for joining us.